What's going on, guys? What's up? What's up? Y'all having a good afternoon? Sorry, I was on the phone. Hopefully, y'all are having a good trading day, good week. All things considered, it ain't been that bad. No, I mean, all right, the whole trade debate thing this morning, I seen a lot of people struggling. It didn't affect me. I don't normally trade between 8 and 10, so I didn't miss out on anything. But I get it. It sucks to see price moving and not being able to participate. Not a lot of fun in that. But otherwise, I mean, it's been a good week. Price, is behaving normally, and movement is good if you want to, take advantage of it. I like that better than those sideways days, but shoot, we make money sideways too, so it's all good. I was looking at this from this morning, right? I brought this up in the morning briefing, but it wasn't the place to really talk about it. And I wanted to give you guys some context into what I've been looking at and what the market is struggling with. I don't really have answers at this point. I don't think anybody does, but at least this might help if you're trying to understand what the hell is going on out there right now. You know what I mean? So, over a year ago, AI agents started showing up in the lexicon and in the conversations and communications about AI. And the idea is that these agents are going to change the way that humans interact with data. And that this week came to a head when Anthropic came out with uh, those headlines where it comes to productivity and humans and their interaction with software. And the market doesn't know what to do with this. Within if nothing changed within Microsoft by the end of 2030, nobody will need Microsoft. It'll be just some gimmicky little software that you may or may not have any use for, right? It's a powerhouse, it's a beast. Blue chip company, massive market cap. Imagine Microsoft being as useful as Yahoo Mail, right? Like, some little junk mail app. But we're moving that way very fast. Not just Microsoft, but all these really big software companies are threatening extinction right now. And the market is freaked out and they don't know what to do about it. And so that's some of the background of what's going on out there. I wanted to kind of hit a little bit on history because I think if we look back at history, we might have a better idea of what's going on. Right. Back in the 1900s, and even earlier than that, in the 1800s, when the railroads were still building America, they were the biggest stocks and the biggest companies, and they had the most money and the most influence, and they shaped our nation. The state borders and boundaries that you see, a lot of that was shaped by the railroads. They owned politicians, they influenced law and policy, they shaped so much of our world. But at some point, they lost market share and oil became the dominant thing, right? So oil companies started to reshape America and eventually sent us around the world and got us into wars and conflict and influence. And that got us through to the dot com bubble. And then on the other side of the dot com bubble, we started getting into the software strength. And that leads us to where we are today, where we started to get into the AI strength. If you yank the rug out from underneath these software companies, we're going to see a big shift in the market dominance. Who's going to be the new leader? What will it look like? How will that influence our country? Those are big questions. How are people going to make a living when so many jobs are being threatened by automation and AI? This isn't new, right? These agents have been around for a while, but it's been uh, the last few days, everything just kind of blew up. And there are so many people who have no idea what's going on at all. Think about what kind of news you used to digest before you became a trader. Because I look back at my life before I was a trader, and I thought I knew the news from a day-to-day basis, but I really was kind of in the dark. I certainly have my awareness elevated since I've been trading because I pay more attention to the day-to-day things that are happening in the world. But a massive amount of the people running around don't know what's coming, right? But the markets are reacting to this in the last few days, and that's what's been shaking a lot of stuff up. To imagine Microsoft becoming irrelevant, right? Or Twitter, I don't know, pick your company, right? All those software companies that do, say, security or web browsers, or I don't know, just there's just so much out there that will become obsolete very fast, and we're seeing the markets react to that. I don't have answers. I don't know that anybody does. But here's software, and you can see how software's been kind of bleeding out. Now this goes back a couple years, it's 2024 and 2025. There is no chance. No, absolutely. Will they blow up and disappear? I think they have enough money that they could pivot into whatever new thing comes along, right? But it will be a new thing that comes along because software's done. The entire question will be, what will they turn into? You know what? AT&T is a company that's been around for a long time, and back in the day when everybody was on landline telephones and cell phones didn't exist, AT&T was a pretty big company too. They had a lot of money and a lot of influence. But look at them now, right? They're still around, but they're they're not powerful. They don't have influence. They're kind of a joke. You mention AT&T as a stock and people just kind of smile like, "Oh yeah, I remember that little turd." Or Ford and GM. Yeah, I mean, they're companies. They're still here. They don't have any power anymore, no influence. They're junk. Can you imagine Microsoft and some of the other Mag 7s becoming as irrelevant as Ford and AT&T? There used to be a stock company called Yahoo, right? Yahoo Mail, Yahoo. That stock, that company is gone. You can't trade Yahoo stock because that all disappeared after the dot-com bubble. It is no longer here. So, you know, even companies like that can shift and become private or just slowly get erased, right? Yahoo. I still have a Yahoo account. It's where I send all my junk mail. When a company forces me to give out an email address and I never want to hear from them, that's what I give them is my Yahoo mail. So the market's really struggling with this, and I don't have really good answers, but I thought it was worth bringing up because I seen a number of conversations about buying the dip, and I really want to caution against that point of view. Sure, there could be an opportunity to make money in Apple and Microsoft and those kind of companies in a buy the dip maneuver. There certainly could be, but from where I'm sitting and from my point of view, that's a dangerous trade. If you're just getting in and getting out and you're being nimble, then so what? Yeah, heck yeah, get some. But don't look at all of this and think, "Oh man, that's a great buy the dip opportunity for a 10-year plan. I'm gonna give it to my kids someday," and all that kind of nonsense, because I don't think it's going to be here. So software is getting ripped apart, just really bad. And then there's all the jobs that are being threatened. You know, that every profession and every industry, it seems like, is facing some form of impact from the threat of AI. We were talking to somebody that works in sanitation. They do garbage, and I don't know if they're a part of the recycling process, or I don't know. I didn't get to ask a lot of questions, but even they have a threat to their jobs through some of the automated processes that are going to be coming along. I don't know in what aspect, but even garbage disposals, right? Even garbage collectors, garbage companies. So who's left? I mean, waitresses? I don't know. We eat at a really nice restaurant and they had a robot bring our food to us not too long ago. It didn't take our order, but I've ate at other restaurants where you order and on your smart device, and you tell it what table you're at, and then you pay and it brings you, your food. So every everything out there is at risk. And it seems like the change is coming a lot faster this time around. When we were transitioning from railroads to oil, they were still communicating with telegraphs. When we went from oil to industry, they were, at least running the mail systems, but they didn't yet have internet. And then when we went from industry to the .com bubble, obviously we had, email. We're moving faster at that point. How fast is this transition going to be? I don't know, but it'll be the fastest transition in history, right? Every one of these cycles has come faster and faster. It's very likely that by 2030 we could be completely transitioned into a whole new thing. And when someone was talking to me about, well, who's going to be the new leaders, who's to say that the new leaders even exist at this point? It could be a company that might IPO next month for all we know, right? Like it doesn't have to be us picking winners from the existing pool of players, which makes it even more difficult. So I just want to advise caution when you're shopping around for some long-term plays. Yeah, AMC and GameStop. Yeah, no. Yeah, no, maybe. No. Someone was asking in the questions channel about pre-market trading, and I said I would go over some tips and tricks for trading in that space because that's where I do a lot of my own personal trading. It is worth noting, by the way, if you're a futures trader and you're trading in the overnight hours, we don't call it after hours and pre-market necessarily. All right. You can, it'll just sound weird because that's what we call Globex, global extended hours, Globex, right? So you can call it pre-market and after hours, but if you call it that, people are going to think you're a stock trader and that you're talking about trading stock in the after hours, which goes until 7 o'clock, I believe. And if you talk about pre-market, they're going to think you're a stock trader, which starts around 4 a.m., I think. And if you say Globex, then if you're at least talking to another futures trader, they'll probably understand that you're talking about anything outside of the regular trading session. Because we have our regular trading hours, and then we have our global extended trading hours, or Globex. One of the tips that you want to realize when it comes to trading in the after hours, and this is going to sound very obvious for a lot of people, but that's the time that other nations are awake and they are trading. Thanks, Captain Obvious. Dun, da, da, da. But with that, it also means that they have pre market earnings and they have after hours earnings, jobs numbers, unemployment, CPI, PPI, rate cuts and rate hikes and rate decisions. All of the stuff that we have, so do they. One of the time periods that everybody loves to trade in the US is the market open. Well, golly gee, what do you think other nations do when they open? The same damn thing. A bunch of people all sitting there waiting for the bell to ring so that they can jump into the market. So if you're trading in the after hours or you're trading in the pre-market, what I call the Globex, you really want to know, when is the next market open? And if you don't know that, you're playing in traffic with a blindfold, and somebody's just going to come along and run you right the hell over because you didn't know when the market was going to open. Thinkorswim has a home screen that a lot of people don't even realize is there. And in that home screen are these different widgets that you can load up that shows you market hours from around the world, right? So we can go in here and we can apply widgets to look at these market hours. The problem with these widgets is Thinkorswim never actually checks to see if those markets really opened today or not. It's kind of dirty, right, to think this, but it's true. So they'll look at the clock and they'll say, "Oh yeah, Europe's open." But they never actually look to see, did Europe have a holiday? Are they actually open at all? They just look at it and say, well, it's Monday in Europe and it's 10 a.m. in Europe. So, yeah, market's open in Europe, even though it may not be open at all. Right? I'm kind of poking around. Uh, you can find it if you go in there. I believe it's under World Exchange Clocks. Yeah, there it is. So you can see the different clocks, and then you can see something like this where it would say Europe or Asia or whatever, and you can stack them and make them neat. But don't rely on this one, right? Because this one, if you're going to use Thinkorswim, it won't really check to see if they're open or not. There's a website that you can go to, which, in my opinion, is the better way to go because they actually check to see, are they really open today or are they closed for a holiday? The website is tradinghours.com, and it's a free website. It doesn't cost you anything, right? I'm a big fan of free, and I don't like to push things at people that's going to cost you money or make you sign up for a subscription or any of that stuff if I can help it, right? Sometimes there's just no other choice. We have to go look at some paid product, but there's a lot of really good free stuff out there. Don't let your bias get in the way and think, oh, it's free, it must be trash. Nah, not necessarily. There's some really good free stuff out there. And this is one of them. Tradinghours.com. It shows you the exchanges from around the world. And if you was to pick on one, since the next market to open is going to be Australia, so we'll just click on Australia. We can see that it is closed until 5 o'clock tonight. It is going to be opening in 3.5 hours. The those two time frames didn't quite match, but you get the idea. This is when they're going to open in 3.5 hours. So it is 2:30 now. That'd be 3, 4, 5, 6. Yeah, 6 o'clock. But if I continue to scroll down here, it'll tell me what their trading hours are, and then it'll show me what their holidays are so that I could plan ahead. This way, I'm not just checking, hey, are they open today? But I can look farther down the road and say, hey, will they be open next week, next month, next year? I'm going to assume that's a you issue and not an everybody issue. Anybody else not able to see my screen? I'm thinking if that was an issue, I would have heard from a lot of people at this point. But I'm willing to check. You're seeing my desktop. How odd is that? Well, I was showing a website. Now I'm showing Palantir stock. So if you're not seeing Palantir stock and if you wasn't seeing a website, then I don't know what the hell you're looking at. Yep, that's what you're supposed to
Signet, I
be
was
seeing.
seeing your desktop where it's got the picture of you. Yeah, that we I didn't see. It was showing your desktop. Your like your where you have all your um, widgets that you click on and what have you. Like your open. I think you call it open the browser. That's what I was seeing.
Yeah, I don't know why. You're the only one. Everybody else is seeing what they're supposed to be seeing. I don't know. They say it's GIGO, garbage in, garbage out. Wrong software, wrong button, wrong widget, wrong something. So this website will answer the question on who's open, who's closed, when do they open, when do they close, what's their holidays, what's their hours of trading. And as you saw up at the top of the screen here, it'll show you when they're going to open next. So that if you get confused about time frames, you can just look at what your time is and compare it to this clock that says, hey, in 3.5 hours, that market's going to open. And that way you don't have to get confused over, are they East Coast, West Coast, GMT plus 245, GMT plus 11 AEDT, whatever the hell that means. All you got to do is say, well, it's 1:30 here. It opens in 3.5 hours. You can count it down and figure out when it's going to open. And I really like that. I get a lot of appreciation for that. So this is a good website. This is one that you definitely want to add to your toolbox. Just squirrel it away somewhere so that if you ever question, hey, is that market open? I don't know. I better go check. You can go check. You don't want to trade in the Globex without having this answer. Another one that is really useful when you're trading in the Globex is FX Street. FX Street is a fantastic website and it would help if you had a paid account, but you don't have to have a paid account. It would help. These guys are the FX market, which means it's a 23-hour a day product. It's going nonstop. And they've got this economic calendar that goes around the world. And of course, you can filter it and remove nations that you don't want, or you can fiddle with the settings, change the time zone, all of that good sort of stuff. But this is a really good one to be able to answer the questions like, hey, does Europe have an FOMC this week? Even though they wouldn't call it an FOMC, they would have some kind of rate decision. Or are they getting, their rate minutes this week? Maybe they have unemployment numbers this week. Right? Whatever it happens to be, you'll see it. You'll have an opportunity to know that it's coming so that you don't get run the hell over. And again, it's another free tool. Now, when I trade, I listen to Bloomberg because I've got XM radio. I've had XM radio for years and years, and I'm not getting rid of it anytime soon. But that's not free. You want something, though, something that is giving you the news of what's going on around the world. And finance juice is good for that. It's not it's not perfect, but you can get a free account, and you do want an account here. Even if it's only a free one, you still want an account here. And that's because this is a news aggregate site. It's gathering news from a bunch of different sources. And I don't know about you, but I'm kind of picky about the news that I get. I don't want to waste my time with a bunch of drama and trash like CNN, MSNBC, Fox News. I don't I don't want any of that trash. And this button right there is the filter button that allows you to go in and choose what news you don't want to see. If you make at least a free account, you can use that button, eliminate everybody you don't want, and then save your settings so that every time you come back to this site, you don't have to go into there and change the settings every single time. It'll be saved because you had a free account and you saved your settings. Now these guys are getting news from around the world. And that's going to be really helpful to keep track of what's going on and to be able to see on the sideline what's coming. And then if there's any shock or headlines or anything like that, that you get that also as it comes through. Um, I've been waiting for this call on my shot with the new year and the insurance and everything. I need a few minutes, guys. Give me a timeout here for a minute. All right. Sorry about that, guys. $3,300 a shot, the 2 shots a month. They're smoking crack. I'm in the wrong business. I need to do that, whatever they're doing. So if you're going to trade in the after hours in the Globex, you want to make sure that you have some idea of the pulse of the nation that's open that day. When I'm listening to Bloomberg, they have like the Asian session, and they'll they'll be talking about who's got earnings today, what famous person or a headline figure in that country was running their mouth. You'll get this feel for the tone and the behavior. Are they, buoyant and positive, having a good day? Was it a bad overnight for them? And all of that starts to show up in the chart, right? It's a much better feel for how is the market going to open, just like our market, right? In our pre-market, we get a feel for how our US market is going to open at 9:30 just by seeing the news and the headlines and kind of getting a feel for things before that bell rings. So if you're going to trade in the overnight, it would really help to have some access to some kind of running commentary. I have Bloomberg, but it's not free, at least not the XM version. But I noticed if you have Fidelity, download the trading app, and within the trading app, it has Bloomberg Radio. I used to have that link saved somewhere, and the link works for like months and months. That way you don't have to log in every day and turn on your Fidelity just to get that Bloomberg Radio link. The link will work, man, half a year or more. And then when it finally stalls out, then you can just log in and get the link again. Now that link, the radio version, it has like news and quiet periods where there's no talking, but still it's better than nothing. And Bloomberg has recently, well, I say recently, in the last year, they've started running a live YouTube. Of course, they're going to try to sell you something and it's going to have advertising and that stuff, but it's free. It's you just got to tolerate a little bit of the advertisements, but so what? Anything that can get you a feel for how the market is performing in that nation as we come into the open for that day, that's kind of the idea, right? You don't want to be trying to trade in the overnight hours when these different markets are coming in without some idea of what's happening in that country that day. I know that may seem like some Captain Obvious stuff, really, I do. But when I was new and I was trading, I started in stocks and options, and then eventually I moved over to futures. And it did not dawn on me at all to be mindful of that sort of stuff until it just, hit me over the head one day. So if I can jump you to the front of the line, and get you over that hump quickly to where you realize that all of that stuff is out there and you need to watch for it, then great. I saved you a couple of months that nobody saved me from. So that's a good start. Now, I don't like to trade after 8 a.m. and I don't usually start trading again until at least after 10 a.m. This isn't a perfect science. Looking at my trades over the last 3 weeks, I don't think I have even 10 trades between 8 and 11. And really, I think it's closer to 12 if I was to scrutinize the data just a little more. There may be 10 trades in there, maybe in the last month, but probably not. Right. I just don't. a lot of times I don't even look for a trade in this window. Now, I'm not saying that you shouldn't trade or that it's quote untradeable or anything like that. If you like trading there, shoot, knock yourself out. Just because I don't doesn't mean anything other than I don't. I don't want to, and I'm not going to. I don't waste my time. One of the reasons that I don't trade after 8 is because markets start to open at 8:10. I think maybe it's 8:15, but you have the dollar opening up and you have the yields like the 10-year, the 20-year, that sort of stuff opening up in this window. I think the VIX, no, that's not right. Maybe one of the VIX products like the UVXY or one of those, something else opens in that 8 to 9 window that can rock the markets. And you don't know, like with any open, you really just don't know what it's going to do. So rather than getting in a trade at 8:05 and then getting run over at 8:10 when the dollar opens, I'd just rather not, right? So I don't. And then of course the open itself, 9:30, there's a lot of research that shows the market has a 50-50 chance of changing direction in the first 30 minutes. 50-50, that's a coin toss. That's not technical analysis. It's literally a coin toss. No matter how bullish we open, we could turn around and go the other way in the first 30 minutes. And I can't tell you how many times I've seen that happen. Or no matter how bearish we are, we turn around and go the other way in the first 30 minutes. So I just don't. But that's me. It's my money. I'll do what I want. Another window that's really fun to focus on is the 2 to 4 window. Now, long ago, I read a book or it was an article or I read something and I've tried to find it since then. At the time, I didn't know how valuable it was and how much it would stay with me in my trading life. So I didn't know how valuable it was, but I can't find it. I've looked, I can't find it. But I read somewhere that this is called the kill zone between 2 and 4 in the morning. And the idea behind it is they were doing research and they were measuring what 2 hour period in a 24-hour trading cycle had the biggest moves consistently year over year. And what their answer was is this 2 hours in the market day has bigger moves than any other 2 hour period in the trading day consistently. Or I don't know, that's the best word I got. It happens more here than anywhere else, and it's the biggest 2 hour moves. So obviously, once I learned that, I started paying attention to it more. But look, I don't get up at 2 in the morning to trade that, right? Like I'm old, tired. I am not getting up at 2 in the morning to trade. It's just not happening. But I often make it into the office a little after 4, maybe 4:15, 4:30 if I'm dragging my feet. And so a lot of times I get in right around the time that the kill zone is ending. And I got to say, a lot of my trades are actually me playing the mean reversion back to where the start of the 2 to 4 session started, right? It's like closing a liquidity gap. Now we didn't do it last night, but that would have been cool if we did. Then I could just point to him like, yeah, there it is right there. I don't always trade that, and it's not the only thing I trade in the pre-market, but it happens quite frequently that we'll get a move between 2 and 4, and then around 4:30 or 5, we make our way back to where the market was at 2 o'clock. Simple enough trade, right? I get it when I can. I don't get the whole move most of the time I just get a bite out of the apple, and that's usually good enough for me, right? I don't need 20 points, just 5 or 6 and I'm good. So it's something to think about. Take take the time to look at price from 2 to 4 a.m. and then what price does after that. How does it respond to the move that we did get if we did get a move? Because here, for an example, we didn't do anything, right? This is like a great example of nothing. Well, that 2 to 4 hour window, we did not a darn thing. So there was nothing to really focus on here, you know. But it's been a window that I've been looking at for a couple of years, and I've gotten some really good approaches that work for me over the years. So another little tip, watch that 2 to 4 window. I I've had a Fidelity account for a few years now, and uh, I don't think I've logged into their desktop app for a while. Can't even remember what the darn thing is called. I thought it was Active Trader or something like that. I might have cleaned it out. Active, yeah, thank you. I thought it was active something. Yeah, I cleaned it out. I don't even have the app anymore. But that radio link is a website link. And I mean, once you've got it, you don't have to update it very often at all. And that's nice, right? Because it would suck if you have to go in and activate it every day. I'm trying to log in uh, for the desktop version, and now all of a sudden it's like, "Are you you? Are you sure you're you? Log in on your app and prove that you're you." I should have just logged into the website. My goodness. But I mean, I at least they're trying to protect us, right? When we wouldn't want to be so easily hacked. So yes, I am me. Let me in. There it goes. I'm just taking a moment to get the Active Trader Pro download started so that we can get that uh, Fidelity link or the Bloomberg link. I think that'll help people. Just take me a moment to get it started. Oh my goodness, just give me the darn download link, you goofy company. Make it a freaking act of God. All right, well, I'm about to just say screw it and do it later. You guys got anything in particular you want to go through today? Wow, I finally found the darn thing. That is just nuts. Should not take an act of Congress to find the download link. Back in the day, Thinkorswim was like that too, man. Schwab, not yeah, TD Ameritrade back when it owned it, buried that download link behind I don't know like 9 different website links, and you had to keep going deeper and deeper and deeper into the site to finally get the link. It was nuts, but we got there. I won't be using it. When I trade with Fidelity, I trade on their website. I don't trade on the app, obviously, because I don't even have it installed, and I've been a client with them for a couple of years. Let me just hide that page for a moment. You guys don't need any of that stuff. So let me get logged in here. Um, they in the time frame that we're talking about, it's more a discussion of what happened, right? So if you're say say you get up at 4 a.m., they're going to talk about what happened in the last hour or what happened yesterday. They're not sitting there scouring the news looking for the latest breaking thing. Not to say that they won't. If something red hits the wire, they'll say, "Hey, this just came in. We heard about blah blah blah," and they'll give you breaking news. But that's not their sole focus, right? And that's kind of the idea behind what we're talking about. Is if you're going to trade in the Globex hours, you want to know what's going on, like who's lining up for their earnings that day, and you know what did the CEO of that company talk about, blah blah blah. You're trying to get a feel for what was going on while you were asleep, what's on the schedule for today in that country, that sort of thing. That's not what I was looking for. That's what I'm looking for. Oh yeah, this is definitely the new one. That's all right. I don't care. It doesn't matter. Now I just have to find that link. I won't need it. I promise I won't trade on this app. I checked it out quite a bit when I first joined Fidelity, thinking I might want to use it, but I just trade from their website because this isn't a trader's app. You know what I mean? Like Fidelity is not an active traders kind of broker. They may want to be, but they're not. It's around here somewhere. He's poking around. I could have swore before it was under news and that there was options like choices in the news section. Tell me I went through all that to get here and then now we are there and I can't and it's changed enough that it doesn't even have it anymore? That would suck. They do have some neat tools. Like every broker, I've got over 40 brokers, over 100 accounts, and more than 70 of those accounts are funded. So I've come to realize over the years that each of these different brokers have unique things that they have come up with to help them stand out and be different than other brokers. Well, it's a good thing we wouldn't have to do this every time. Or if you did, you'd get to the point where you're fast at it. I used to be able to go right to it. That's what is so frustrating. Maybe they're not um, integrated with Bloomberg anymore. I see a lot of Reuters stuff, but that's not what we're looking for. That really sucks. So all this research stuff, you can get that on Thinkorswim in an easier format too, I would argue, without having to climb through all of this like we did just to get there. Oh, that's too bad. I bet somewhere I've got that shared link and I will look around to see. Notice it's got Benzinga here, but it doesn't have Bloomberg anymore. Yeah, that sucks. Oh, you did find it. Yep, that's the one. That little window, you can drag it around and just keep it minimized. And that link, now that you shared it, that thing will work for months and months. And then one day it'll just stop working and you'll have to share it again. So squirrel it away because you'll be able to use it again and again and again. You guys see everybody doing those caricature portraits on like X and Twitter, the Facebook and all that? Anybody get one done that was even remotely decent? I was messing with it this morning. This is as good as I got, and it's not very good, but I think I can do better. One of the things that Fidelity has that I like is it's got this integrated scanning tool that will focus on volume, and I think that their volume tool, it's like a relative volume tool, was probably better than Tasty, Thinkorswim, uh, definitely better than Robinhood, Webull. It's better than all of those, and it integrates well with a lot of the legacy indicators like Bollinger's, RSI's, that sort of stuff. The cool thing is you don't need that trash on your chart. It just pops up with these headlines or this little alert box, and it'll say, this stock breaking above its Bollinger Band high, or this stock has a MACD crossing below zero. And I don't know, it's got some really decent tools. I'm not against Fidelity. Obviously, I do a lot of trading there. Um, I just don't like their desktop app because it's not a trader's platform. Too many buttons to push to get a trade on. The charting is not like it's not a seamless process to use this thing. It's not like Thinkorswim. You can just navigate that thing like crazy. Then it's more clunky, and so I don't trade with the app, but I still think they're a good company. I got nothing wrong with them. They do fractional trading too. That's what brought me to Fidelity when I started the account with them. I wanted to start a vacation account. So we put, I think, put 500 in it. Normally I start accounts with 300, but I think for some reason we started this one with 5 and then grew it out from there. And it's okay. I mean, as far as brokers go, I just don't, it's not an active traders platform. So I'm going to get out of this thing. So hopefully you're better prepared now to trade in the Globex. Keep your eye on the headlines from Finance Juice. Schedule your economic events through FX Street and know when different markets are opening or closing from tradinghours.com. Between those three, you won't be sitting there blind in the Globex and get the hell run over. Now, another thing about trading in the Globex is it doesn't move a lot, right? I think that's one of the complaints that I get from a lot of people is typically we just don't see big moves in the Globex. Now, sure, this Sunday move was extreme, and last week between Thursday and Friday we had some big moves. But you guys get it, right? On a normal day-to-day basis in the Globex, we really don't move that much. And there's a solution to that, right? Like it's the solution that I've had for years now, and I love it. And that's to trade the NASDAQ. Now, hear me out. If you think the NASDAQ is a crazy, wild beast that makes massive, exaggerated moves, and you're trading it in the regular trading hours, you're exactly right. It's a wild animal, right? But in the pre market, even though it still makes bigger moves than the ES, they're more muted. And that's exactly what I'm looking for, right? I want something to move more than the ES moves in the pre-market. And so I do most of my trading on the NASDAQ in the Globex. Once we're in the regular trading session, I just lean on the ES and I don't really mess with the NASDAQ that much anymore. I used to, and I still will if it's the better of the two things to trade that day. Then sure, I'll trade whichever one happens to have the better chart. But most of the time, once we're in the regular hours, I just go to the ES. But in the Globex, that lack of movement on the ES, it kind of sucks. And the solution is don't trade the ES, trade the NASDAQ because it's the one that's actually going to move. You can trade on Robinhood for free. Just remember that free isn't free, right? I believe that Webull also is free. At least it used to be. I would like to think that it still is. And it's free, right? But see, Sophie, that question is missing a lot of pieces that leaves me guessing. One, what kind of trading are you trying to do with these day trades? Stocks, options, futures? And then two, what kind of free are you looking for? Do you mean free as in no commissions, no fees, or free as in I don't want to buy data, I don't want to pay to have an account there. What kind of free is free? If you use a broker like the TC2000, you have to pay to just have the broker. That sucks. You know what I mean? Like I don't understand why anybody would pay to use a broker, especially an antiquated piece of junk like the TC2000. That thing sucks. And you can't even use it unless you pay for it on a month to month basis. That's silly. So, okay, so we know it's not one of those, right? You're looking for stocks and options where you don't have to pay fees and commissions. No restrictions. That 25K day traders restriction is not because of the brokers, it's the law. So, no, there's no broker out there that's going to allow you to day trade without that 25K restriction because it's the law. If you want to trade without those restrictions, you have to use a cash account, which means, you don't get the margin. So you can't do spreads and butterflies and that sort of stuff. Well, there's a goal to move it down to 2,500, but I don't think the law has passed yet. It was just, as far as I knew, under proposal. If they passed it, then cool, right? I mean, that'd be awesome. But as far as I knew, it had not been passed. We are in a transition period. The new rule will happen in 2026, apparently. The FINRA approved a massive overhaul to eliminate the $2,500 requirement, but they are not yet done finalizing the paperwork. So they're going to use a fixed time intraday margin standard. The new minimum, most brokers are preparing to lower the barrier to $2,000. And instead of counting trades, brokers are going to use sophisticated risk engines to calculate your buying power based on the actual volatility and concentration of your positions in real time. Yeah, that sounds like fun. It says most brokers won't flip the switch until Q2 or Q3 of 2026 because they have to put these new risk systems into the brokerage accounts. Like Thinkorswim's got to build it into the system, Fidelity's got to build it into the system. So in the late part of 2026, you should be down to that 2K minimum. Hey, there's Jeremy. But sorry, Sophie, the 2,500 or the 25,000 restriction, that's not a broker issue. That's just US law. And the good news is that by the end of the year, it'll be down to 2,000, which is still not restriction free, but it's restriction light. That restriction is one of the reasons that it sucks to trade stocks and options as a day trader when you could just go ahead and do futures and not have any worry about PDT whatsoever. Because the PDT issue is a stock and options problem. It is not a futures problem. There are different regulatory bodies within the law, and there just is no PDT on futures. Sorry. The short answer is, Sophie, that the 25,000 restriction is not a broker's issue. It's the US law. So you won't find a broker that's going to let you trade without that PDT restriction. You can trade with a cash account, and that account doesn't have restrictions other than it's not a margin account. So you couldn't do spreads and butterflies and iron condors and that sort of thing. But if you use a cash account, there's no restriction. Or if you don't use a cash account, the restrictions are going to change by the end of 2026. It'll be $2,000 instead of $25,000. So that's a good thing. Just got to wait for the end of the year. But that restriction is why so many people love futures, right? I know I did. I started in stocks and options. And when I heard that the micros were coming, because we didn't have them when I started, there was no MNQ back in the day or MES back when I started. So if you had a small account and you wanted to trade futures, you were just out of luck. Then these micros started coming. And so I went and, did what I like to do. I love starting a small account and then growing it out. I do it in stock accounts, options accounts, futures accounts. I don't care. Take $300, throw it in an account and grow it out. And that's what I just love doing that. So I went to Tradeovate, threw $300 in that thing and just got to work. Absolutely love it. No PDT. Oh, you're going to give me money? Heck yeah, I like money. At some point, I'm sure that it will get to free trading, that somebody out there will do what Robinhood did, but for futures. I'm almost positive it'll happen at some point, but I wouldn't hold my breath. Wow, that's a book, Jeremy. So if you're going to trade in the Globex, keep all of those things in mind. Thinkorswim really doesn't have an indicator like I'm going to show you on TradingView. You can kind of put the pieces together, I guess, but I think it just functions better on TradingView. I'm going to use just a clean chart. All right, this is an indicator called true close. I don't recommend that you screw around with the time settings. I would just leave it alone. What it's highlighting is when each trading session opened up. So here's Europe in blue. Where'd my drawing tool go? Are you just going to quit on me now? Come on, quitter. Hmm, fine. Be that way. got a way around that. Now you can turn that table off. You don't need to have the table on. But do. There we go. That's what I'm looking for. Okay, this blue area is the Europe session or the London, like it says right there, London, right? And then you have the open of that London session, and then you have this pre-market for us, and then it gets into the 9:30 window, and then we have the New York session, right? You can see the green box here for the US session. I believe you'd probably want to turn it off. I mean, you know us, right? It's ours. Yeah, you don't need to leave that on. But it has the Asian session. If we were to zoom out, I guess I didn't have it on there. The Asian session in red here, and then of course, the European session. So this indicator highlights those zones for you and marks out, quote, the true close. Now, it's not really the place to get into this concept called the true close, but there's a lot of people who believe that really the first 30 minutes or the first hour of the day is your market day and the rest is just noise. I'm not saying that I believe it, just that does exist. And so what they want to do is they want to highlight where was price when the market closed on that quote true close level. And that's what they're highlighting, right? So this was Europe's true close, that cyan line right there. And you can see that when we got into our market, we tried to run up into that level and we couldn't get through it. We rejected and fell down. So this indicator just kind of gives you some insight into those other markets trading sessions. And the thing is that's really neat is stuff like the 5-minute open range that we use. Well, you can use that on Europe's open, or the 30-minute open range that we use, you can use that on their open, right? Because it's the same thing. We get a market open, they get a market open. You can use the expansion of their market open with the measured moves, just like we do with ours. Everything works the same way. So if you're trading in that overnight Globex session, you want to use every tool available to you to better understand what your levels are and where your restrictions are at. We don't have this for Thinkorswim, but somebody out there could possibly build something like it. Yeah, it's called True Close, right? I didn't make it, it's not mine. Go into the indicators here, that button right there, and type in True Close. It's right there. This Zellerman. To me, it's a very noisy indicator. I'll give you a little tip. Say you don't want the box, right? So you turn that off. Nope, that didn't work. How do I turn that box off? One is this box, this really bright white box. I don't like that. It's this box here. So one thing that you can do, let's turn New York off so that it's just not even on there. And we'll focus on Europe. Click that box and make it a darker color. Notice how it's not so bright now. It's still there. If you want to zoom in, you can like, oh, there it is. So don't make it invisible, which you could make it invisible. Don't do that. Just make it a darker color so it's not so darn bright and obscuring price. See how this to me, that's too bright. It's hiding price. It forces me to look that way, and I don't want it to look that way. So make it a darker color, and that way it doesn't capture your attention so badly, force you to look in that direction. This indicator is based on a concept that says at the end of this box, this little box, that is, quote, the true close. That's why the indicator is called true close. It's not my logic, right? I'm just pointing out that that's why they highlight this little bitty box right there. Because as far as they're concerned, that 1 hour or that 1 30 minutes, whatever that is, I think it's an hour, that's what they consider the market to be for the day. And at the end of that candle, when it closes, that's it. That's their quote, true close.
Hey, Sig. So
Yeah.
for this one, it would be so for a true close, it would be 9:15.
If the market opens at 9:30, then it has to be later than that.
I guess I'm just trying to understand so the little white box, that would be what they call true close, right?
No, this line at the end of the white box.
Oh, okay. Then what's the little white box?
At 2 a.m., it closed at 3 a.m., and they marked the line at the end of that. So at the end of that 1 hour, that's where the line starts. And that line is their true close.
Interesting.
For the US, that would be 10:30. Right? Go in and turn the US back on from 9:30 to 10:30. And then that's true close. Like I said, not my theory, not my logic. This indicator just highlights the London session and the Asian session, right? So use it if you want to use it so that you can look and see, oh, yeah, that's when Europe opens. And there's the 1 hour open range for Europe. Do with it as you please. I knew that it existed, so I wanted to point it out, but I'm sure you guys have realized I've never showed a picture with that when I post my stuff in the chat, and there's a reason for that because I don't use it. So if you're trading in the evening time after the market has opened back up, that would be in the Asian time frame, and they have Bloomberg Asia. They do a really good job of capturing the tone of their morning and talking about, what everybody's focused on for the day and their earnings and everything. You'll really get a feel for what they're looking at, and if there's any economic events, they'll cover it. That way you're not trading blind into the Asian Open. It'll help. And really consider trading the NASDAQ if you're going to trade in the after hours because, well, the darn thing moves. And that's one of the biggest troubles with trying to trade in the after hours is the ES just really doesn't move. So, with the NASDAQ in the after hours, I like to risk 2 to make 10. That's kind of my ballpark. It's a 5-to-1 risk to reward ratio. It works really well in the Globex session. And sure, my win rate is less than 70, 66, 68, depends on the month, really. And I can push that a little bit, get it into the 70s, but it usually affects my risk to reward if I do. And if I'm willing to sacrifice a lot of my risk to reward, then sure, I can get my win rate into the 80s and the 90s, but I don't need a 90 and an 80% win rate. I don't need a 70% win rate. When you have a 5 to 1 or better in your risk to reward, you don't even need to win 30% of the time and still grow your account. And that's what's really cool about risk to reward, right? So in this slower moving time frame, you can risk 2, make 10, and there's no reason to take a full stop, right? You don't even have to worry about getting stopped out on the 2 points. Just the trade isn't working. GTFO, look for another trade. I don't trade every single day. If there's not a trade setting up, then there's just no trade, right? I get in the office between 4 and 4:30, 4:45 ish, and I'm done by 7. Win, lose, or draw, whether I got a trade or I didn't get a trade by 7 a.m., I'm done. It doesn't matter. I'm done. And I'll find something after 11 or after 12, get something, in the afternoon session. So, you might come in the after hours and just not have anything there. There's plenty of examples where we're just not doing anything. So what? Don't force it. There's nothing there. Come back and do it again next time. I'm in the central part of the United States, but when I mention time, I always refer to the Eastern time because we're all trading the same time frame, right? We're all trading the US market. Yeah. Um, I never tell somebody my time frame because, well, I don't care where they are, right? I see it all the time. Someone says, I'm in London and I'm trading your markets." So you're still trading our markets, right? Or all these California people who always want to tell us their California time frame. I don't care. I don't even know what your time frame is. You're still trading the same market I am. So rather than someone having to learn mine and me having to learn theirs, we can all just learn the Eastern time and use that. Although the Chicago traders like to use the Chicago time frame because they argue, hey, our market is right here in Chicago. And I can't argue against that. And Kansas does use Chicago's time zone. So I could do that. But I like to use the East Coast time with everybody else, right? East Coast works. Well, I worked in the oil field most of my life, and I'm used to getting up really early in the morning. Yeah, my advice to a brand new futures trader would be don't actually trade anything. Spend your time learning first because you can sit there and get focused on paper trading as if that's actually going to get you somewhere and it won't, right? But it's an easy thing to fall down the rabbit hole and say, "Oh, I'm going to focus on paper trading because that's going to be the solution to me becoming a profitable trader." No, it's not. You can paper trade for the next 40 years and still lose at the end of that. You're just completely worthless. So don't fall down that rabbit hole. That's my advice. You cannot paper trade your way to success. Yeah, go through the courses first. Take your time. Binge watching the courses will get you nowhere. So as you're going through them, if they mention things that you don't know and you've never heard before, hit pause, write it down, begin to build a list because the courses do not have everything in them. Nothing out there is going to give you everything, right? And we all have to put pieces together on our own. So when you're working through the courses, if they mention something you've never heard, hit the pause, write it down, add it to the list of things that you want to research later, And that way, when you get through all of the courses, if they didn't answer the things that you had on your list, you at least still have the list, and then you can start searching for them on your own. Since we can't binge watch our way through the material, take your time and don't multitask. I say that as a person who is a multitasker myself. I generally will have a video playing on one screen, and then I'll be charting on another screen while I'll be talking to someone in the Discord on another screen. And at the end of it, I'll say, yeah, I just watched two videos. No, I didn't. I was half-ass paying attention to two videos while I was charting and messing around with the software and chatting with somebody in the Discord. So my advice would be, when you're watching the video, have a notepad and a pen, or your digital equivalent of a notepad and pen, and turn everything else off and watch the video, pausing it to take notes. Get screen grabs if you can. Get software that allows you to take a picture of the screen. I like to use this software, but it's not free. So if you want to use something else, you can just use the Windows store right there and type in something like screen capture. There's plenty of free software out there. Get something that allows you to take pictures so that you can take pictures, and then you can add your notes to that and add questions to it to continue your research. Yeah, Snippet is there. The reason I don't like Snippet is because you can't annotate the chart afterward, right? So I like the ability to take a picture and then document what I want to document on that picture. And this is not a free tool for sure, but I use it for my journal. So as far as I'm concerned, I paid for a journal, right? That's how I see it. And I do use the hell out of this thing. I got one for my wife because she saw me using it, was like, I need that. And so I hooked her up with it. She uses it all the time too. It's a fantastic tool, but it's not free. But it is a great journal. So the advice is, take your time, work through it very methodically, realizing that nobody has all the info. And at the end of those courses, you'll still be missing a lot, right? Like there's no place out there that has all of it. So be prepared as you're working through the data to realize that at the end, you're still going to have to hunt for more and be making notes of what's missing as you go. A notebook is good for sure. Um, I've always recommended people open their own Discord. It's free, it doesn't cost you anything. So you can make a, a playbook, for an example. Here's a Discord that I built that has my trade strategies in it. So um, I'm a visual, hands-on kind of person. I learn better by developing and building and structuring things. So me writing it down and structuring it into these channels helped me better formalize what my strategy was. And for my research, I have a channel that focuses on um, it's where I just grab videos and throw them in there so I can organize them later. It's like my junk drawer. So say I want to learn about hammer candles. I go over to YouTube, I type in hammer candles, I scroll through the list of videos that's there, and I capture the videos that I want and dump them into a channel. And then once I'm done searching for videos, I start watching those one at a time, taking notes and screenshots along the way. And at the end of it, I look at my notes and see, what am I missing? What do I need? When I'm done with all of those videos, if I don't feel like I've got enough, then I will go back to YouTube and get more videos. If I'm good, then I look at my notes, see what I learned from the videos that now needs follow-up videos, and I'll go hunting for those. That's my process. I spent months on each aspect that I thought was really important, like moving averages. They're really important. I spent months learning moving averages, and we're talking 8-hour days, 5 days a week, week after week after week after week, just moving averages and VWAP and profiles, price patterns. But that's me, right? Um, Other people want to learn to the point where they are sufficient and they say that's good enough. I'm there, I can do the thing, and then they move on to the next thing. That's never really been my approach. Right. This is one of my discords. All of these discords that you see on the left-hand side here, 90% of these discords are my discords. They're private discords. So say I get a book that I really like. This discord here, for an example, the art and science of technical analysis, right? So I find this amazing book and I'm like, "Oh, wow, man, this book is awesome. I've really got to dig into this book." First thing I did, made a Discord and broke that book down chapter by chapter. So every one of these chapters is based on the material that was in that book. From there, I start researching the different parts and pieces from the book, right? Just working my way through it. Or take a sophisticated website like Investors Business Daily. Investors Business Daily is an awesome website. They've got great education and a lot of material and a rich history of research. But it was overwhelming, like there's just so much stuff on their site. So I went in and I made a Discord for Investors Business Daily. And then I went back to their site and I just copied the hell out of everything that I thought was valuable or useful to me that I wanted to learn or remember or study later. And I filled up a Discord full of it so that I could then go back later and study it without feeling so rushed, and I wouldn't lose what web page it was on or where it was buried within their website, and I just worked my way through it. The discords can be really useful for all sorts of stuff. At one point, I started grabbing Tasty Trade videos. Tasty Trade has done a lot of stock and options research over the years, a lot, right? And it got to the point where I was losing track of the videos I had watched versus the new stuff that they would come out with. And I'm like, shoot, I can't keep track. Did I see this one? Did I not see this one? I can't remember. You know what I mean? They just have so much stuff. Finally, I just started grabbing things and I would run a search for something like the Jade Lizard, and I would get all the videos for that Jade Lizard and then watch them. And as I watched them, I would take screenshots and take notes and organize it into the respective channels because that's how my brain learns and remembers, right? This is what worked for me. Everybody's got their own way of learning things. This is just what I do to get it to stay in my head so I don't forget it by the time I have breakfast tomorrow, you know. And then the cool thing is if I start to forget or if I need a refresher, well, it's right there. I could just come back over and dig through it and review it. Well, the thing about learning trading stocks, options, or futures is trying to understand where we came from and where we're going next, right? It'd be easy to just say price, but it's not really just price, right? Um, Take moving averages for an example. I don't trade with a moving average. How many times when you guys look at my day trading charts that I post, do you see moving averages in it, right? Because when I'm trading, I don't have that trash on the chart. But if I want to analyze price, one of the first things I do is turn on analysis tools like VWAP and moving averages and Bollingers and MACDs. I don't want any of that stuff to take a trade, but I might want that stuff to be able to analyze price depending on the kind of trade that I want to take stock, options, futures. For the futures, probably most of the Bollingers and the RSIs and MACDs probably wouldn't be very helpful, right? Because that's more analysis for the bigger picture. But I could show a lot of ways that even using those would provide context and insight for a day trader in the futures market. Say, like knowing that the the Nasdaq is going to hit the edge of the Bollinger Band on a daily, and that could have been the low of today for all we know, right? We might have reversed today because we hit the Bollinger Band edge today, or maybe we hit the Keltner edge today. I don't think we did, but who knows, right? We might have. So those things could still have provided insight if someone was looking for them. But knowing how a moving average works, how it's calculated, how it's been used throughout history, what other traders have done with them over the years, learning about the slope, for an example, and how that slope matters, what it has to offer from a context or an evaluation standpoint. There's so much that you can get from studying, even if it's not necessarily for a trade. My go-to list when people say I need a list of things that I need to begin studying. Great. You need to learn how to learn. I know that sounds silly, but if you don't know how to learn, then you're going to really fail at trying to learn a whole bunch of new stuff. Do you know how to take notes? Do you know how to research topics, gather data, gather material, gather information, organize that information, and then synthesize it, meaning work your way through it, cataloging and learning and absorbing the information so that when you come out on the other side, you actually have that. You gained something out of it. If you don't know how to do that, you got to learn how. When I went back to college, one of the classes they made us take was how to learn. And I thought, this is the stupidest class. I can't believe I went back to college so I can join a class on how to learn. And yet I got a lot out of that class because I was a fifth grade dropout who skipped school and didn't bother to go back and just grabbed my GED along the way. I didn't know how to learn. So that class was really insightful. We have to know how to gather data and gather information and then work our way through it and learn what we're working through and have questions once we come out the other side and say, okay, I learned all of this, but now I have questions about this, and this. So learn how to learn. Learn how you learn because you learn differently than somebody else. Learn how to use software. If you can't use software, you cannot be a trader. So, can you use websites, multiple browsers, YouTube, PDF software that allows you to adapt text to PDF, break down a PDF back to text, take pictures, annotate those pictures, different picture software? If you can't use software, you have to learn how to use software. And I get it if you're thinking, I want to learn how to trade, not any of this trash. Yeah, but you need all that trash. Do you know how to keep your computer running efficiently? If not, add that to the list because you need a well running computer. You don't need a brand new state of the art $5,000 machine. You just need to keep the one that you have running well. If you don't know how to do that, learn how to do that. And then price. You really need to know how to read price. There's a lot of candle books out there, but they're boring and it sucks really bad to read candle books. It really does. So focus on a way that you can learn all about candles and candle patterns and candle setups and formation and wicks and hammers and learn all of that in detail. Not, yeah, I watched a 2-minute video on hammers. Ching ching, I'm good to go, baby. Let's look at dojis next. How about you spend 40 hours of study time focused on hammers, and then another 40 hours on the hangman, which is the inverse of the hammer, and then focus on spotting hammers and hangmans in the chart at the right location and at the wrong location for another 40 hours. Well, that's 3 weeks of 40-hour work right there. And that got us through two patterns. So, you know, add dojis next, and then on and on you go, and morning star reversals and evening star reversals, and how those patterns form, what it looks like when they fail, right? It's a process. So now we've got candle patterns, using software, performing research, then how to use a broker. And that, all about the broker. Where's my P&L? Where's my trade history? How do I sort that history? How do I put a trade on, take it off, adjust a trade before it's entered? How do I work the order, time and sales, everything about that broker that you can learn so that you can use the broker and all of the little bells and whistles that are built into that broker. All of those topics would be really good topics for a new trader to focus on if they wanted to start getting into trading, whether it's stocks, options, futures. And that's the cool thing. You could start with futures, and the things that you learn would allow you to trade stocks and options too, because price is price. There's different position types, right? Different products to trade, different language, bullish, bearish, long, short, trends, uptrends, downtrends, trends that are ending, trading those trends. Candles and patterns, I got to say, when I was new, I looked at that and I thought, I'll do that later. It feels silly to say that now, but that's what I did way back when I started. I did not learn technical analysis first, and I didn't learn candles first. because I was trading options, and you can trade probabilities in options. So I just did that. But I had a full-time job and I was a full-time college student, so I didn't have a lot of time in there to also learn options and price action. I had to choose. So I chose, well, let's learn options and save price action for later. And that's what I did. But looking back, I would have learned faster if I had learned price first. That would have really helped. But, I got by because probabilities are just fine. They'll get you through. But it would have helped for sure. Different concepts like risk to reward is a really big deal. Learning that, knowing that you don't have to be right all the time is so helpful. Understanding that my win rate right now only needs to be 26% for my account to not blow up. And anything above 30% win rate, I grow. Imagine that. I can lose 70% of every trade. That means I can lose 7 out of 10 trades day after day after day and still grow the account. I can win 30% of the time on accident. But when I was new, I thought it was all about winning. That if you wasn't winning, then you were just going to lose money and bleed out and blow your account up. And that's really scary because that's frustrating. How are you supposed to win all the time? You can't. It's an unrealistic expectation to believe you're going to win all the time. So knowing that you don't have to win all the time, that's a really worth learning. But there are consequences for risk to reward, right? So that's a part of the learning process. What the hell is risk to reward and what are the consequences? And then how do you trade as a trader and what is the outcome of the trades that you're taking? Knowing how to run the math to figure out what is my current risk to reward? What's my strategy's risk to reward? How am I actually doing? And what do I need to do to change it to make it better? Knowing that the broker has the tools built into it to calculate it for you or to at least allow you to put stops in as soon as the trade is done, entered, so that you got these brackets in place. That way you don't have your emotions in there and you're not moving things around and risking more than you wanted and getting greedy or getting scared and getting out too soon, staying in too long. It is a process. It is a lot of work, but the good thing is you can grow yourself while you grow your account, right? That's the best part about trading. As long as we've got control of the risk, then we can trade anything. Stocks, options, futures, it doesn't matter. As long as we've got control of the risk. This is a really good piece though, right? 7 years of school to become a doctor, 4 years of school to be a lawyer, 3 years for a pilot, 4 years for an engineer, and then, people show up and say, "I'm gonna be a trader." They download Robinhood and start tomorrow. I'm not pointing any fingers because I did exactly that, right? I found out that Robinhood existed. I downloaded it and I had money in that thing, and away I went. So when you're focused on what am I going to learn and what do I need to learn to be successful, when you come back out to a chart, remember to keep it as simple as this. You need to understand how price got to where it is right now so that you have a better understanding of where price is likely to go next. I know that sounds very simple, but it really does just come down to that. How in the hell did we get here? It sounds silly, but it's really important. And now that I know how we got here, where are we likely to go next? Now, I've run across enough people over the years that I know a lot of people think that we can just follow some checklist and that the answers are as simple as I'm going to put my chart on a 5 minute. I'm going to put these two indicators on. And when price does this, I'm going to do that. And I get in here and I get out there because that's what it says in the book and that's the rules. And ta da, there we go. But unfortunately, that's not how it works. Every time I get asked, what's the time frame my chart should be on? It's another indication that that person hasn't gone through enough education yet because there is no right time frame. The goal of the chart is so that you can understand what price is doing right now. And if that is best seen by you on a 30-minute chart, then you should use a 30-minute chart because that's what's showing you what you need the best. But maybe the 5 does a better job, then you should totally use the 5. If you look at price and you're thinking, man, this sucks. I can't see anything. Like this 65-minute chart right here. This sucks. I can't see anything. This is not helpful. There's no way I'm going to get a trade with this chart. Well, then I know that this is not the time frame I need. Even though I know a lot of traders who use the 65-minute. They love this chart. I am a trader who loves this chart, but not for futures trading. So asking somebody else what the right chart time frame is would not do me any good because if I ask the wrong guy and he says you should use the 65-minute, it's awesome. I make so much money with that 65-minute. If you're not using it, you're just doing it all wrong. You're not going to make money like me. That is not helpful. What indicators should I use? What time frame should I use on my chart? When price gets to the edge or gets to the line or the level or the pivot or the marker or the box, what am I supposed to do when it gets there? Do I wait for the candle to close and then get in? Do I get in before it gets there? What if it doesn't get there and it misses the line like it did here today? The answers to those is not in a textbook somewhere. But those are the questions that I see asked a lot, right? And unfortunately, nobody else can answer them for you. If we could, you would have already found a book that had those answers in it, right? Or a video or there would be plenty of documentation where everybody had answered that. But there is no right answer to that. So when you come across those things and they are honest, legitimate questions, they're good questions. What time should I have my chart? What should I do when price gets to that line? Those are really good questions that you have to figure out. There's no wrong answer. You just have to see which one you like better. Get in, wait it out, miss the trade, average in. There's only so many things that we can do. And sometimes the answer is going to be one of those, and sometimes it's going to be a different answer. And none of them are wrong. None of them are right. They're just, these are our choices, and you'll have to decide which one of those choices you want to use. So when you have questions, write them in the book or your Discord or your notes or wherever you're at so that you can remember it, and then you can start hunting for answers to it in price action or in another book or a video or whatever, right? And just keep the list going, building it out as you go, and you'll get to the point where you're looking at price and you are understanding the things that you see. And if you see anything that you don't understand, write it down, ask in the chat, because you're surrounded by traders here, so that we can point you in the right direction, even if the only answer we have is, yeah, you should hit YouTube for that. Well, at least you know, right? But sometimes the answer is really simple, like, oh, it's just, A, B, C, D, whatever the heck. Great, then that's the answer. If you haven't got patterns yet, pick 2 continuation patterns and 2 reversal patterns as a good place to start. You want more than that, but there's a lot of patterns and it will just feel overwhelming if you try to learn them all at once. Having 2 of each is not too overwhelming, and it can get you started. So hammers are really good reversal patterns, and hangman is the opposite of the hammer. So those are 2, and it's a really good one to choose. You could choose dojis. I know they're kind of generic, but there's a lot of dojis. There's like 8 or 9 different kinds of dojis out there. So you could choose those, or morning stars and evening stars. They're the bullish and the bearish. Those are 2 that are really good, right? So if you choose hammers and stars, then you've got your reversals. And for continuations, you could choose something like Marbozu and, I don't know. Marbozus are kind of my go-to, but you could poke around and find another continuation one, right? But it at least give you a good start. You could do books. I gotta say, candle books are so boring. They're so boring. Yep, you need a good Google. Google has built-in images. So if I type in Marbozu candle, Google asks, what are you looking for? Do you want a video about this? Are you trying to buy one of these? You looking for news? No, I just need some images. Okay, here you go. Now, me, I'm the hands-on kind of person. I want to see it. I want to fiddle with it. So if they'll show me 700,000 different Marbozu examples, then I've got a really good idea of what it is, right? And then from there, maybe I hit up a YouTube and watch a couple videos. If I see in this list something that I think would be worth watching, right? What do I mean by that? There's all these strange names, right? But hey, we know those guys. Look at that. Bullish Bears, Marbozu candlestick patterns. That might be a link worth clicking. Here's another one from TradingView, because TradingView's got quite a bit of education built into it. But you will also find ones from Fidelity, Schwab, Thinkorswim, right? TD Ameritrade. Those are links that I know are, quote, safe or safer. That way I'm not just clicking on some random Joe Schmo junk website. Goodness knows where it's going to take me, right? I'd rather go to a site like Bullish Bears and TradingView and one of the brokers. The same is true on YouTube. So if you go to YouTube and you're searching for the Marbozu candle or whatever, you can put the name of the company you want to hear from in your search parameters. That way I can see, hey, did they make a video on this? All right, there's the Bullish Bears one. I just tried Schwab. I didn't get anything, but never know till you try. And if you love books, by all means, there's plenty of books. Help yourself. Just when it comes to candles, every candle book I tried to read was so boring. Oh my goodness, it was murder. I couldn't take it. I'm a reader. I'm an avid reader. I love to read, but not candle books. I felt like somebody was trying to strangle me with an extension cord. It was just horrible. So I didn't read candle books. I watched videos. I've read some PDF documents for sure. And I've found a couple of blog posts that were really good over the years, but not entire candle books. I've never made my way through even one. I just choke out on it every time. Yeah, we've got candle patterns on the Bullish Bears website, but it's more of like an introduction to candles and each of the different patterns than it is an extensive, exhaustive research on candles, right? And I've always gone a little above and beyond when it comes to learning, right? So I didn't just watch some 5-minute video on this is a Marbozu and call it quits, right? I spent months on each of the topics that I studied, but I try to cycle it out, right? I'm in my office for 12 hours and I break my education down into 30-minute chunks. So I spend 30 minutes on a hammer, grab a drink, get up, run around, do what needs to be done, come back. I pick another topic and I give that 30 minutes. Or if I didn't finish what I was doing, I go back to the previous topic and I get another 30 minutes on there. Right. But I'll do that day after day after day after day. It just doesn't stop. And if I get bored, say I've been studying VWAPs for, 9 days now and I'm just kind of getting burned out on VWAP, fine. I just set it aside and I move on to something else. And I study that for a while. But that's me. I don't stop just because, okay, well, I watched a video on VWAP, so now I'm good. No, 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 no. You must not have watched my video because I've never once in my life ever said that interactive brokers is my best recommendation. No. Now, if I was reading a script, right? If the Bullish Bears asked me to fix one of their videos and in their video they said it was the best, then you might have heard me say that. But I think you're talking about Lucian. and his video. He's the one that did a lot of those videos. No, Kevin is Kevin, Lucian is Lucian, and I am me, right? Lucian is this bald-headed dude right there. Kevin's not bald. Right. The long-haired guy is Kevin, and the bald guy is Lucian. So you just gotta just take your time, right? Focus on price action. Um, all the extra stuff that we use, it's helpful, but you don't need it to trade, right? At the end of the day, all you need is to be able to understand what price is doing and how you're going to take the trade with the least amount of risk, and that's what it all comes down to. And it's not because somebody said you get in here and you get out there and you pull the trigger when it does this, and that's not trading, right? That's trying to mimic what somebody else is doing. It'll be from you having an understanding that I want this kind of trade and I want to get out at this kind of reward. It's kind of like the discussion we had the other day about trading back up to the top of a range, right? Like up here. If I get that reversal signal, and this is where I think price is going, I don't try to get in at 68.60 and run it up to 69.30. I don't try to do that. Why not? I know where it's going. I'm really confident it's going there. I don't care. I'm not going to get in this for 2.5 hours waiting for that. I won't, and I don't. I'll get in, I'll get my 3 or 4, 5 trades through that whole move up, or I might just get 2 and call it good, right? And maybe I get 5 points in one trade and 8 points in another one. And I'm good. I'm done. Now, is there any book that says I shouldn't try to run the whole thing? Nope. I just know what I want as a trader. I know what my trade looks like. I know what I'm going to attempt to get out of it. So that's why I keep stressing it isn't about some answer in a book telling you what you need to do. It's about understanding what price is doing and then you making a decision about how do you want to profit from it. This is a really nice reversal bar. I love this trade setup. The next bar sucked, right? But even that right there, that big red bar drop and the reversal back out of it is a pattern. Where was we going? Back up there. And even that, I would not try to run it back to the top. Doesn't mean that I won't run it back to the top, but that wouldn't be what I would try to do when I got in. If I end up getting a runner and it just keeps running really fast, like away from me, yeah, it's possible I might stay in, but I'm not trying to. Not when I get in, I mean. I'm not thinking, oh, I'm going to run that all the way back to the top. So you want to focus on trying to understand what price is doing, and then have a real coming to Jesus meeting with yourself over how do I want to profit from this? I learned to recognize these signals by first asking, what do I want to trade? Right? We got all these days behind us. I know what my analysis time frame is. It's the 5 minute. So when I'm looking around and I'm trying to decide what time frame am I going to use to find the patterns that I want to trade, I like the 5. I used to use the 3. If I'm doing swings, I might use the 15 or the 30. I might use the 65. There is no wrong time frame, right? So for futures, I like the 5. Now, what am I going to trade? We have years and years and years of price action behind us. So if I'm thinking, you know what, I'm going to learn me a strategy. What strategy do I want to learn? Well, what price do I want to learn? Here's a hint. I don't want to trade this trash. So I'm not going to spend any time looking back to try to figure out, I wonder how you trade this trash. Because I promise I don't want anything to do with that junk. So I'm not going to look for that. Well, how about this? This looks pretty good. Yeah, not bad. I wouldn't mind trading that at all. Or hell, what about that? That looks really good. I wouldn't mind trading that either. It's like we're shopping around at the grocery store trying to decide what we want to eat for dinner tonight. What kind of price would you like to trade? Because if you're going to figure out what trade you want to take, you have to figure out what would you like to trade. I know a lot of traders who would trade this. I know everyday traders that will trade the open and they will trade this. Good for them. I have no interest in that whatsoever. But if that's what you want to trade, then you need to go back and find as many examples of this as you can find. So, if the question is, what does the trade look like? You answer that with a question, where is it? Find it. Find an example. Once you found one, find another one, and another one, and another one. Here's a folder that I collected in one afternoon on this exact topic. This is one of my trade strategies called the previous day 111. And it doesn't matter if we hit 1, 2, 3, 6. The strategy's name is previous days 111. We could have called it lights out day, right? It doesn't matter what we call it. That's just the name of the trade. So then I went back and I looked for opportunities in the past where price broke out of yesterday's price and it hit the 111 or the 1, 2, 3, 6. Now, this is my favorite trade whatsoever. I love this above all my other trades. This is my favorite. So I went back and I found this. This was July 23rd of 2024. It's on a 5 minute. I can see yesterday's price and I can see how we broke out on the day and we ran up and hit it and we rejected it. Okay, I can study that in detail and learn about it and see where it goes from there, right? So here's the 23rd, same kind of breakout, only now we're just looking at today's, right? And it's the same concept, 0 to 100. Price broke out, got to the 1236, failed, and came back in. But look, we're going to back up for a moment. This is this. This is the same day. The only difference is that first I was measuring all of yesterday to mark out 57.57. And here I'm measuring just the intraday and I got 57.55. That's close enough, right? It's the same. So here, another day. This is the 25th. Yesterday's high, yesterday's low, 111, 1236. Look at that reversal. What a beautiful opportunity to trade. I've got so many pictures. Yesterday's high, yesterday's low, 111. What a reversal. What a move. So, how do I learn what the trade setup looks like? I went and got picture after picture after picture, and then I spent time studying what price did when it got there. Because how am I going to understand what's going to happen next time if I've never seen it before, or I've only occasionally saw it in passing? I need to be able to recognize that it's forming. I need to know where it forms, how often it forms, what it looks like if it fails, so that I'm not relying on my stop to get me out of the trade. I can look at price as it's forming and say, hey, you're not supposed to do that. What the heck? I'm getting out of here. And I can just close my trade. Sure, I'll lose, but I'll lose less than hitting my full stop. Now, this is one strategy, one setup, one trade. But you could do the same thing for these half back bounces. That's another trade all by itself. What do you do on a half back bounce? What does it look like? When do they form? What if it doesn't bounce and it breaks through? Get as many examples as you can get so that you have something to study and focus on. That's why I asked, what does your trade look like? A VWAP bounce or a VWAP break, that's another really good trade. The 5-minute open range and the breakout of the 5-minute open range, that's another really good trade. There's so many of these, right? So you go in the past and you find as many examples as you can find. Make sure you find failures and winners, that they worked, and you find some that didn't work, because you want to see the good, the bad, the ugly. That way you get a better idea of what your trade looks like. The really cool thing is, after doing this kind of work, I have it saved forever. And I might learn something new. And then I have these pictures where I can zoom in and say, yeah, I just spent 3 weeks learning about, I don't know, morning star reversals. And now I zoomed in and gosh, I see a morning star here and I see one there. And it enhances what I already knew about this trade by adding something else that I can do with this trade. And that way your education just stacks on top of what you already learned, so that the new thing you learned helps you better trade the previous thing you learned. If I was an indicator person, I could do this with Bollinger Bands and MACDs and moving averages and all that sort of stuff too, right? RSI along the bottom, and you can add to your heart's content. Me, I just like price and my drawing tool, but this tactic works for any kind of pattern, as long as you can find it in the past, to capture it, highlight it, store it, study it, research it, dig in and ask as many questions out of price as you can. Like, what was going on this morning? What happened on August 9th, 2004? Did Europe have news? Is that why it had such a pop there? And then why did it roll over? Did they give a rate decision? Was there a bad earnings? You know, what was going on that day? That way we got a more context into why. But honestly, you don't need the why. It helps, you know. Because at the end of the day, as long as you can recognize the price as it's setting up, then you recognize your trade. This is one of my favorites because we always know where it is. Price has to break out of yesterday's range, and then we have the opportunity to reverse and come back in. How simple is that? That is so awesome. And you can find smaller versions for sure. You know, we can measure just one leg and catch halfbacks or little breakouts. We can measure just this section right there between this high and that low. And this was a breakout to a 111 right there. Just that little area. Because the trade works everywhere. So you make a file like this and you stick them all in a Discord that is focused on the name of the strategy, whatever you decide to call the strategy. And then you can build on it and add to it and find videos that help you better understand it. And right, it all just grows and grows and grows. Wow, it got late. All right, guys, let's wrap it up. By the end of the week, we will have some of the other Mag 7s earnings done. And I think we'll have better answers about the Homeland Security or DHS. We very likely will have more answers about software and its beatdown. So we might do a deep dive on Friday and bring out some of the macro tools. It's been a little while since we did that, so it would be a good look around the market and see what CTAs are doing and volatility funds, and look at what dealer positioning is, market breadth behind the scenes, some of the VIX signals, the price of puts, so that we can see how scared is the market getting, right? Are they really shook up or not? Because I know it feels really bad out there, but the market continues to not crash and burn, right? Here, I mean, here's another day where we're still in the 6,900 area. So we'll do a deep dive on Friday, and between now and then, I think we'll learn a bit more about this software threat that we're all looking at. As always, I take topics and requests, not just me, but I know Kevin does too. So if you guys have topics you want to cover, or things you want to look at, always hit us up. The replay will be in the replay channel, and I will see you guys at the morning briefing.